Hi, good morning, ladies and gentlemen. Hi, colleagues. Hi, Doug. Hi, Polo. Rhino. Hi, Stefan. Hi, Mr. Flo. Eve. Welcome, Arne, Anderson. Who is else in the room? Zeb. Welcome to our trading room, guys. Welcome, and let's see what we can do today here in our trading room. It should be educational discussions about we should have discussions about the market and so on, and having some fun. I'm still short since 22. I would like to get an Y in the chat if you can hear me, please. Would you like to type an Y in the chat? Just to be sure that you can hear me. Okay. Something is going on here. Good. So we talked yesterday and the day before. It was an amazing day yesterday. The market went up and we left the gap behind us, and everything works against all odds. So it was a very bullish day, and the institutional level marked this 76-ish area as an area where the market might stop. It stopped, I think, around 70, 80, 85. That was the close. So it was very close. All these estimations are interesting and good. So just for our for our orientation as well. Now we are and the gap was, as you know, 45.12. We left it behind us. The market didn't look back. And my impression and what I was posting here in the room was simply the market is very vulnerable. It went up. It was bullish, and everything seems to be green. But my charts, what I have here on my side, and what I'm doing in the seminar showed really weakness all the way up, and that was my firm belief that this market is not giving us a chance to raise further up. And I think what I missed yesterday, it was simply the fact, just let me trail a little bit, the fact that I missed the announcement today about the CPI numbers. As expected, CPI numbers are above the expectations. That means they are not the best one. So the Fed, as you all know, will rise maybe the rates for 0.5 points in March, in the next month, and that is simply a small shock for them. For the markets, I'm still short 22. I took this wonderful DID, dynamic iceberg development here. I got at 22. I've at a point 22 even. I got a fill here, and as you can see on my screen, and then let's see what happens in 30 seconds. The market opens in 30 seconds. It can happen, and that's I wouldn't be surprised if they are going against me here again immediately against 21, 22, because the market can shake me out of this position here. Now we have 5 minutes to go, 5 seconds to go. Let's see that. Maybe I'm lucky and they're going straight away down. Yeah, that's nothing. That's not working here. That's what I've expected. Okay. Okay, I'm out of this position here. That was that's the risk when you start at the beginning. So I was short 22. I've traded one. And I'm fine so far. Not my target was 45.10. First 45.10, 45.12, but it didn't work. So let's see whether we can see and get another entry for this during the day. I'm sure the day is long and we will get some other chances here. So the market opened gap down, gap up. So excuse me. Yeah, okay, no. So gap down. Gap down for sure. We have another big huge gap at 45. 45. Let me see that. 45. 79. 76, 77. ADD is minus 1,900. That means 1,900 down. The broader market is negative. VIX is at 2185. The SPX is down, of course, and the ticks are down as well, but they are recovering. So keep in mind that could be a short coverage here at the beginning. But anyway, it was a perfect trade here. When you understand the dynamic iceberg developments with the TradeFinder and Bookmap, that was a perfect entry here, and exit was bad, because my expectation was they could do a little bit more to the downside here, but they didn't. So anyway, I'm good off this trade. It's not bad, but it's not the gain I've expected, and so we have to live with that. The treasuries, the 2 years is up. I think Rhino mentioned it already. Everything looks quite bearish, and the crucial point and the crucial level, an important level as well, will be the 45.12, 45.10 area. If they're going to trade back into 45.10, 45.12, if they break that, then we will see the 44.80 area, which is indicated as well by the institutional levels. I have 44.90-ish, and the lowest one is the 44.60. If they are trading back, and possible resistance could be the 45.34, 44, and even 47. This is maybe an area to watch. If they succeed to trade into this 30-40 area, they might go and retracing here and finding good resistance and trading back into 45.10. But first of all, allow the market to do what the market wants to do. It seems this is really short covering here. It might go higher, of course. That's one small pullback. If they can't succeed to cover more, then the market will drop below 45.10. That's my impression. So you can leave your comments in the room and let me know what your thoughts are on this on the market today. The VIX as well is a little bit recovering, but that's normal. And we have a huge gap to the 45.77 area. Don't forget that. So we have had 2 days before the gap, or yesterday the gap to 45.12, which is maybe going to be closed now. And if so, keep in mind we have a gap up. The market can trade down, can touch this 45.10, even go a little bit lower, and then trading back. If if the mood changes, who knows, in the market. And then we will see. Maybe this is really a good as well entry for the bullish people who wants to buy it, every dip. Let me just close to mute everyone. Please, if you are on Zoom, please silent your mics or switch off your microphones as well. So I've muted everyone, not to disturb anyone here in the room. So as I mentioned, this live trading with comments, educational sessions with Doug and myself here, and the point is just give you some ideas how to trade, what to use, where to watch for, what to do. What to be focused. Excuse me. And then see what we can do in the next 2.5 hours. So what I see on my chart here on Bookmap is, as mentioned, my first trade was off this wonderful DID here. It wasn't perfect because they didn't trade lower, but it doesn't matter. It was, you know, as long as it's not a losing trade, if you are still green in your account, that's fine, that's wonderful. So they are now trading back. I think the first resistance is 35 and the next one 40-ish something. We will see what happens then. We have an attraction point, you know, time, price, volume, and we have the 45.10 as well, a good resistance. I wouldn't say the gap wasn't closed. The gap wasn't closed so far. Yeah, not the danger, but the possibilities here that they're going to trade against 45.10 here, because this is a really prominent marker at the moment in the book, in the order book, and that might be an attraction point so far. The only one where I would abandon my opinion here is if they simply cancel 45.10, then I will change my mind and have a look to the upside, to switch to buyers.
According to Scott Minard from Guggenheim, saying that the markets should prep for 50 basis point hike in March. So there was a tweet from Scott Minard on Twitter there, saying the markets should prepare for 50 basis point hike in March. It's only 25 basis.
For those of you who mentioned before, I have the financial juice. I think yes, it's financial juice as my news channel, and while I'm watching the investing.com, but there are, I think, numerous channels out there you can use for news and so on. Even IB, Interactive Brokers, is offering a new channel. If you are with Interactive Brokers, then have a look there.
Senator Manchin says the Federal Reserve must tackle inflation head on.
So far, I don't see any reason now to trade, because I'm not sure whether this is really going further up. I need a little bit more confirmation on my charts here, and on my charts I'm watching. These are the utility charts, for example. The tick is up. That means the market is bullish, as you can see. It's not exciting, so the market is not well excited at the moment, and that might all be short covering here. Don't keep that in mind. If you're a volume profiler, then see the volume profile. The shape of the volume profile should be like a P, and that indicates, according to Dalton, an short coverage day, which is not sustainable, which is not really something which lasts, which is reliable, so that the next day will be bullish as well. So we passed 38. Very nice sweep over there. And for those of you who are using the MVP, the Market Volume Pro, have a look here at the new functions. We have, by the way, updated the Market Volume Pro, just to mention that very briefly here. So we did some bug fixes, performance improvements, and we added an V delta stop run plus minus signal absolute. That means if you know, Market Volume Pro comes with a hit bid and lift offer. That's the aggressor volume. That's the market volume. That's the volume which is traded in between bid and ask. And when you watch my chart, you see this is the aggressor volume or this is the market volume. And the green line represents the buyers. That means they are the buyers from the ask who are buying from the offer, and the red line represents the sellers who are hitting into the bids. And the difference between those is the V delta, this blue line, the V delta line here, the V delta curve. And I've adjusted my settings here. I have adjusted my settings of V delta and stop run indicator to 2000. That means if we get a spike which is above 2000, which is equal or above 2000, I'm getting an square, or you can add an different symbols. We have added the horizontal bars or V bars. It depends on what you like. So I've get an alert at that point that this market is highly overbought there. And you know, when the market is out of imbalance, when this red and green line are not together like here, then the market is out of balance. It is imbalanced. And when you understand the market mechanics, you will see that the market always looks for equilibrity. That means they are trading together here, like here. Look here, they're in sync, they're in harmony here. And that means the market is now well balanced, which was not the case here. And what we have added to the Market Volume Pro, which is really good. So I would recommend it to switch it on for every instrument. It works for dxFeed, for Rithmic, for stocks, for cryptos, for futures as well. You see the out of balance signals here. I've took that's an H, that's the horizontal. You can select a vertical one symbol, and that indicates that this market is really strong overbalanced. And when a market is strong overbalanced, it seeks equilibrity, and it looks to come into balance. That means it comes to a break here. The price needs time to recover. They must find either new buyers or new sellers. It depends on, in this case, the market was overbalanced here at that point, and now you see the market is simply struggling to go up. Some new buyers are coming in here, and then bounced off this institution level at 47, as mentioned before, and then trading back because of this event here. And what we added to the Market Volume Pro, please update for those of you who are using a Market Volume Pro, is simply the V delta stop run plus minus signal absolute. That's the absolute deviation of the zero line. So for yes, I'm using 2000. You have adjusted for every single instrument if you are using stocks, forex, futures, whatever you are using. So please keep in mind that all these instruments are trading with different liquidity, and you have to adjust it accordingly to your instrument. But it works independently of market by order data. It has nothing to do with market by order data. It is simply the measurement of the aggressiveness of the traders here, of the participants in the market, aggressor or market volume. And you see that on my dome, that's what we are measuring, and it's absolutely reliable. You see stop runs here. It's very, very similar like the stop run indicator of Bookmap. And
I've seen evidence of more broad-based changes.
I have to switch off that. So, excuse me. And yeah, stop run divergence indicator. You see the highest volume was traded here. Then you see a very nice divergence. You can even switch off this curves here, these lines, and that means the market comes to an, let me say, rest here. It gives you a good opportunity, maybe, yes, to sell it against these institutional levels, and as well a very small dynamic iceberg here. Again, when you understand this technique and what's behind, it's really straightforward, and it's on some days really easy to read. Then you can take your opportunities here. Maybe you get, sometimes you get 10 points, sometimes you get maybe on 2-3 points out, but anyway, you know, every tick counts. 45.36, 45.37. Exactly on the inst level. Keep in mind those inst level are there in the book before the open. This is nothing hindsight here. How do we get into live trading? What do you mean? You have to join the English our audio room, Red. For those of you who are new, welcome to the channel first of all. And by the way, you have agreed to the TNC, so you are responsible for your own trading. What I'm and we doing, so Doug and I, is simply to comment what we see on the chart, what I'm seeing on the Bookmap, and what the other colleagues, they have maybe, yeah, not maybe, but sure, different charting systems, different approaches. I think everyone is welcome to share his ideas with us. This is not an absolutely, that's not an ideology here. This is a trading room just to help everyone to see how to make money in the market, if the market gives us the chance to do so. And what I wanted to say, yes, so this is not a signal room. That means this is not a signal room by saying that, I mean, we are not providing you buy here and sell here signals. It was frozen for a bit here. So they want to be back in for 45.80 maybe. And now we know that we have a bullish day, or maybe a bullish up move, because look here, that's the event which tells me this is a bullish day, because they have cancelled this big liquidity. The idea was to sell 47 here. I was busy explaining the MVP and then trading into 37. They didn't do that, and they now cancelled this 37 liquidity. That means that's really a sign, based on my experience, that the market is yes, more bullish than bearish at the moment. Doug, by the way, you can use your mic if you want. Maybe he isn't hear me. He can't hear me. Not sure. So at the moment I'm focused and looking for buying the dips, maybe adding a price alert.
UVXY, sell volume spike.
This is quite important level, not only because we have the pivot point here, but we have an institutional level here, and so far this as you know, these institutional levels are based on options as well. I have to look what, maybe there's a spot gamma level as well here, I'm not sure. Yes, but it's Rhino, it's at the moment a POC as well, the daily POC on my chart. What is the institutional level? Institutional levels are levels I'm receiving and sharing, and thanks to Chuck, we are posting them for free here in the room. Institutional levels are based on options markers, and some algo levels. I'm receiving them from an institution on voluntarily base. It's something why I'm observing since more than 1 year, and the colleagues here in the room as well. And these are quite reliable, so most of the time they are really nice and reliable, so that we can lean on the institutional levels. You can have them for free if you want, join them, watch them, observe them, put them on your chart, and yeah, simply see what happens. We are not, I can't sell them. I'm not offering, I'm not doing a selling, marketing or whatever for them. So when we look at the tick are not excited at the moment. They are not excited. They are not excited. They are, of course, they are moved from negative to positive, but this is really nothing in comparison to last days. And when we have really bullish days where we see all green here, it's going to rest a little bit here around the 58, 50s, 58, 60 area here. But the selling pressure isn't as high as it was at the beginning. So as well, the ADD is improving, the tick is improving. That means this is really an unreversed market. We don't expect lower prices at the moment. It might change, but at the moment I don't see any chance to sell this market. I need a little bit more arguments to get into a position here. Now it's over, it's chopping around this area 58, 60, as you can see. And be patient. That's the hardest point, to be patient in trading. Wait until the market discloses what the market wants to do, and then take your action. Keep in mind all the discussions we have every time here in this room, that the gap is still 45.77. So we close the gap, not nearly. I'm not sure whether the pre-close is valid or satisfied the settlement idea, but the close was very yes, the close was very the low was very close to the gap, and now we have an open gap at 45.77. If they can't break it or take it to 77, then the market's really weak. It shows weakness. Is there a link to live room Zoom? Yes, Red, there is a link and it was posted before. Can you go please a little bit more up in the Discord room, and then you will find the Zoom link. I can post it here as well here. The symbols, the brackets and the exclamation marks means the brackets are a symbol for estimated highs and lows. Yesterday it was, I think, 78 or something, and the exclamation mark there to emphasize that this is a support or resistance area.
ESH2 by volume spike.
A strong support and resistance area. So we say buy volume spike. That means within 30 seconds they have traded 3,000 contracts, and therefore this symbol or signal is coming up. That means if you are trading such an amount of contracts, that can mean something, of course, because that's a huge amount traded within few seconds. And in this case we see a big pressure here. And even this settlement gap might be an attraction for the market today. This is a volume spike. We call it a volume spike. We don't like the expression or the term stop run, because when you zoom in, most of the time you won't see a stop run. It's simply a high volume traded into a certain price area. Therefore we call it volume spike. We have another expression for sweeps, which are single order ID events, and absorption as well. By the way, you can see the stop run as well with the MVP Market Volume Pro here. It wasn't really not a high one, big one, but there was a certain volume here at this point here. So you have the same indication, and as well you see the imbalance between hit bid and lift ask, or bid and ask here, how they are trading into this. And as mentioned before, this imbalance is going to be closed, as you can see here. So when the imbalance is big in the book, then it lasts a little bit. It takes a little bit time, but by the time it's going to be closed. That's the nature of the order book, of the trading.
UDXY by volume spike.
Very nice. I think this is a very nice sweep here at that point. Let's have a look here at a symbol, a sell sweep. $331 contracts have been swept at 65. Doug, I hope you're right with a short squeeze. Currently I'm watching 70 and 75. Currently I'm watching 75, 77. That's my focus at the moment. Oh, that's quite interesting. Watch here. Look here, this iceberg. Watch this iceberg here. He started, he waited. That's interesting. The order idea of this iceberg started at 77, right there where the gap is. Then he lowered it here at the 74, 75. Quite interesting to watch that. And then he lost the patience and he wanted to get filled or be filled at 71 maybe here. Quite interesting to watch that. Rely on facts, guys. Rely on facts, and this is a fact. We can't deny it. So, just for you who are new in this room and maybe watching the TradeFinder with Bookmap, come on. Yeah, watch what happened here. Watch what happened. There was one order, one guy or one institution, I think Doug is calling him. He was sitting at the settlement here, 77.50 or whatever it is. Then maybe he knew more. Then he lowered his order ID to 73, but the market isn't trading into 73 right now. Maybe he lost the patience. He wanted to get filled here. And finally he got 1,000 contracts here. That's what he was out for. Very interesting, this event here. So he was waiting at 77 and he covered at 66. Let's see the details of this iceberg here. He got a fill of at 65 and 3/4, 65.75. He was in the book for 237 seconds and he got 1,000 contracts here at 65.75. Oh, he caught 1,000 contracts here. The attraction point for the market is still 75, 77 and 80.
SPY, sell volume spike.
Another sweep of 1000 and an iceberg of 680. So there's a kind of some selling pressure comes in here, or kicks in into 70, 74, 75 area. We need a little bit more upside, I would say. Not sure if they are really going to close it exactly here, but if not, that might imply, that might, not might, but that will imply some weakness. The 45, this level here, 45, 58, 57, 60 becomes support right now for the market, and the next level should be 75. And as I mentioned before, we saw this 45.10, and oh, look here, very nice spoof. You see this very nice spoof here. You see this pattern here. That's a very nice spoof. So they're expecting the price. Yeah, it's a little bit slower here, but anyway, you see here this stairs effect, the stair pattern. That's a very nice spoof. They're spoofing and they are lifting the price up from 70 into 72. Relative liquidity changes here. That was really a big add-on in the book on the ask. 538 contracts, and we see, based on the iceberg profile, a very nice resistance in 68 something, 68.50 when you zoom in or when you stretch it. You see 475 icebergs have been traded, disappeared for some reasons here. Oh yeah, I know why. Yeah, here. I have to stretch it on to zoom in. 680 contracts at icebergs traded at 68.50 here. Very nice spoof. If you don't watch Bookmap in this case, or you don't have Bookmap, or you're not watching an, it's even not you can't see that in a normal order book or dome. It's not impossible to see that, but you see this very nice spike. They canceled, so I think they are not expecting the price to come back here, or coming back here at 72.50. That's really annoying. So I was not concentrated enough to sell this area, but anyway, waiting for the next event if I've got one. I'm watching this 57-58 area here. That could be an support. That could be a support. Another sell of 400 contracts. You see how this institution levels work, precise and most of the time very reliable. Calm trading so far, nothing really exciting. I'm watching if they can bounce off this 57 into 70 area again. If they are canceling, what makes me a little bit more bearish here is that they canceled here liquidity at 80. So they don't expect the price coming back here. And I don't think this 45.85 only. I don't believe they are coming back here based on the chart, on the signs on here. Not on signs, but based on that what I see here. Let's see what happens in the next 2 hours. It was an attempt. It was an attempt to close the gap. It was a very impressive attempt of the 45.12 into 70. That was really impressive. HS, there is no information we are talking about here in the room about the institution levels. This is something I'm sharing for free. These levels, as I mentioned, are based on a friendship I have to some colleagues in the finance industry. And that's nothing I want to describe, or I can't even describe or sell or whatever. It's quite easy. So they are based on options and algo levels, and you can simply observe them. They are for free. You don't need to spend money on anything. Put them on your chart and simply watch. They're based on options. I think so. These are as well gamma levels. If you're following Cem Carson or Sergei Pafilyev or even Brent Kochuba, they are very similar to them. There are a lot of bright guys who are trading options, who are showing their gamma levels. And I think there are some other mathematics behind for the algos. When the algo reach the level, you see what happens. Or when the price reaches the level, then most of the time something happens around these levels here. You can use them as resistance and you can use them as support. I'm even started to put the levels for NQ. I have as well for gold and oil, but that takes time, so I don't want to put up to place them in our daily prep room. I'm not trading in Q, so you have to ask some members here in the room how these levels work for NQ as well. I'm not sure. I would say they are reliable, but I'm not sure about that because I'm not watching them. So nothing to say here from my side because we have had nice action. For those of you who has been short at the beginning, they made a nice gain here today, and then the market bounced off the low, short covering as mentioned. Most probably short covering, and we left a huge gap from the beginning on into 45.77, and now it will disclose whether the market is strong enough to trade 75, 77. 80 has been cancelled. 45.80 has been cancelled. That's a sign that the market don't expect the price coming back to 45.80. I was short at the beginning, and very nice development iceberg short. So I've covered one, then I left one in the market. My expectation was 45.12 at 45.10 again, but it didn't work. So I was off this trade with a small gain in this case, and then now I am watching and trying to explain what I see on my chart and to give my comment on that, what you see maybe if you're following my Zoom screen here. I'm trading based on Bookmap, and I'm trading based on TTW-TradeFinder, and as well this very nice tool, which is a one-time chart, so you don't have to spend much money to see stop runs, to see divergences, to see imbalances in the market. Yes, and for the aggressor volume, that means for the aggressor volume. MarketVolumePro measures the aggressor volume, and TradeFinder measures or analyzes icebergs, stop runs, volume spikes, absorptions, liquidity changes, and so on. And yes, synthetic and native icebergs as well. Mike, yes, to everyone in this room who is listening, in the daily prep, I'm posting every day as well on Twitter when I have time, this institutional levels, and they are for free, so you can use them, you can observe them, you can put you on the chart. Some friends of mine, our friends here, Chuck, Rhino, and Doug, and Slightly, and others here. Chuck is putting them on his cloud notes, and you see the institutional levels here. They are not, the yellow ones are the institutional levels I'm posting when I'm around. That's the point. When I'm around, not on holiday and other activities, I'm posting them mostly half an hour before they open. Most of the time, half an hour before they open at least. So they are there before they open. And Chuck is really so kind to put them in his cloud notes, and you can use it if you want on your Bookmap copy, or you can use the numbers and put you on your whatever you have, NinjaTrader chart or whatever you have. The daily levels on my chart are my levels, which are, yes, mostly only for myself to understand, to see the high and the low and the close. But all this information, you don't need my daily levels. All those information are in the in Chuck's cloud notes. approaching 70 again here. Let's have a look here. Look here, the top was 70, 72. Very clear in a range, but when you see the excuse me, so when you see what happened here and you draw a line, then you see a very nice divergence. That was the highest volume traded here at that point at 62.75. The market is usually going a little bit higher because it takes all the buyers to trade a little bit higher. Then it came back to the 57 and then bounced off the level, trading again, but with less less volume. You see that very nicely here. That was the top, highest volume traded here. And that's, we call it the divergence for those of you who may be new to this normal technique, charting technique. This is a very nice divergence. So the highest volume was traded here, and then they are trying to, there are some buyers who think the market is going further up. But on low volume. You see the volume here is lower than at this point here, or that point. Another sell of sweep 320. Some was sold 320 contracts. I need a little bit more reasons to take a trade here. I don't see any reasons for myself to do anything here. So the overall market ADD is recovering from minus 2000 to 137. That's extremely well. That meant the broader market agree and goes in line with the bullish stance, with the bullish view. The ticks are not convincing. So there's really still negative overall. That means the market is bullish, and that confirms the idea that I've mentioned, short covering, and Doug as well here in the room. Short covering, but maybe that will change. They are attacking 72. That would be a double top here, based on the first touch at 72, and they are trying to buy everything. And you see this resistance at 72, 74, 75 here. Now watch this event at 45.80. It was cancelled because This guy didn't expect the price is coming back, but now when the price approaches 72.75, he is back in the game here, 45.80. See that? Cancelled. The price is approaching the level and he is back in the game here. Now officially the gap is closed here. What a move, what a strength, what a market strength.
SPY by volume spike. UVXY sell volume spike.
By the way, I'm short 79.50. I'm focusing on my trade here, as you can see. I'm short 79.50. I took one off, one in. So even if I'm going to be stopped here at 79.50, I'm okay. They must break 77. If not, I tried at least this one because it was a huge opportunity for myself to take the short here. So I missed this 80.81, got a 79.50 as a fill. Would be good to see 57.
UVXY by absorption.
Now the stop should be 77.50. I'm at 79. Let it run. Just see. We'll see if it will work out for myself. Watching 72. Watching 72. Not bad.
UVXY by volume spike.
Doug, I need your help. 60, 60. Come on. They cancel the resistance here. That's not bad. That's really nothing I would like to see here. I just want to see 70. If not, I'm taking my profits here. I need to see 70. That's okay. That's okay. Come on. Come on. They lowered the resistance a little bit at 75. I will do the same here. 77. 77 was the gap. Good. Doug, thank you. Rhino. That will become maybe something I don't like to see here. Yeah, coming against me here. Yeah, that's what I thought here. 70 was the area. Let's see if they can retest 70. Most of the time what they are doing simply retracing it back and then retesting 70, but I think it's not going to work right now. Let's see, be patient. So 77 is my stop. Most of the time when I'm in, so I'm a little bit too early every time, so they are just trading in my direction, then retracing or retesting this area, and then starting again to trade into the direction I was long or short. And that's really a little bit more, yeah, I'm going to be stopped here. That's really a little bit, you see how they are cancelled that. That's really bad. So what happened, the perfect, and it wasn't that perfect, it was not at the tip, but at the top. But it doesn't matter. So it was a very nice move here down. I've expected 65, 70, and when I saw that it dropped, pulled back here at 70, I hoped for the retest of 70, and that doesn't happen here. So anyway, it wasn't perfect trade. So on my side, it was not perfect in terms of MAE and MFE. But I'm happy with that, so that's okay. Look here what happens. Yeah, that's my destiny, guys. That's my destiny. So I'm finding the top. Look here, and then it goes against me, and that's okay. That's fine. So as long as I'm green, I'm happy with that. Let me show you my trades if I can do so here very quickly. You know, guys, I'm not guessing. I'm not speculating what happens at 80 to 60 or whatever. I have really clear signals where I think the best for myself, for my understanding, is to enter or to exit. And I was short at the beginning at the DID at the before, I think 1-2 minutes before the open. I took the short here at 80, or what was it, 70, let me have a look, 79.50 here at the top. And as it turned out, most of the time, the first leg down, the swing back, I should have left it at 79. Even 79 would have been stopped out here. And then it continues the travel to maybe 60 and 57 again. That's the point how I'm trading that. This market's based on TradeFinder, based on Bookmap, and I understand what you're saying, but I'm just focusing to find the sweet spots. I'm calling them sweet spots because this market is really I love these areas where the market goes immediately in my favor, in my direction. You see what happened here. 90 was cancelled. That means the market is not looking back, or the price is expecting not to trade into 90. So we have a little bit more a selling view on this market right now. Oh gosh, look here. So that was my first target, 58.60. From the top at 79.50, 79.50 short. 79.50 short. Someone posted he wants to go long. I'm not sure who it was. JC Bunales looking to go long. Okay, you see how the structure of this of an instrument and understanding the market helps you to understand where the market is trading to, and maybe you need a little bit more helpers to be on the right side. You know, John, I don't see anything below 50 or at 50. I think the market should show us his hand, like poker game, like poker play. That's poker game, and you see what happens at the moment. We have sweeps, 500, 300, 500 sweeps here. That means there's a selling pressure. And as we talked from the beginning on, short covering on this huge move down from 70 into 12 or 10, and then back to the close. The close was confirmed, and now it's a very clear sell here. And the art of trading is simply to understand it and to pick the reversal points or reversal prices, reversal levels. That's the art of trading. Not be caught in a position where you have to cover or to close your trade, but to understand, be patient, and wait. That's the most important part and the most hardest part. It's not the technical stuff. So nothing to say here from my side, just observing. And again, my short was 79.50 here, and my target was 60 or 58, this area here, very clear. So I have had a very clear entry and reason to enter the price here, and I have a very clear target here based on the institution levels on the 60 area here, and that's how I think how trading works, because you have clear entry, and if the market, and in the case the market gives you right and proves you right, then you should manage your trades to exit a trade at a certain level. And I'm leaning on this. I'm leaning on the institution levels here. Now you see this is a DID, dynamic iceberg development. $500 contracts traded at 45.55, and as well you see this stop run sign here on the MVP, which was traded into 2000. You see this. I choose to take a square here just to say that's an exaggeration of the market. That's a kind of exhaustion what you can see here, and this exhaustion signalizes the market comes to a stop here. It takes a break for the market, and you see how it take time for the market to recover from this move here. You see this huge exaggeration, this huge imbalance between bid and ask, traded bid and ask. This is market volume again. That's market volume, and you see how it comes together. It comes closer and closer and closer and closer here. That means they must come into an balance again. That's imbalance, and now they're coming in balance again here. The reason why the market stopped here, first of all, the iceberg, second, the volume spike, 3,488 contracts traded at 52.50. That's a huge amount, and you see a stop run sign based on the V delta on Market Volume Pro here, and that's the reason why the market is recovering or takes a break here. Couldn't find any sellers, and the consequence is that the price is rising. Polo, my internals are down. How comes that? I would say they are not excited or exciting. Yeah, VWAP is still below, that's right, yeah. But when I look at the broader market ADD, and when I look at the tick and the outcome, it's not exciting to the upside. But you are right, they are above VWAP, yes. However, that can change. No. VWAP is, I don't know, 53, 54. This white line here on my chart, if you're watching Zoom, this is VWAP. Okay, come on. We have great guys here in the room here as well.
UVXY, sell volume spike.
Just to point you to the Market Volume Pro. You see the volume here traded was much higher, bigger than the volume traded here. So this is called a divergence. Very nice to see. That was a stop run here, indicated by this new function. Again, for those of you who are using Market Volume Pro, please update. It's free for everyone who is using Market Volume Pro. We introduced the V delta stop run signal absolute, and if it exceeds an amount of a certain amount here, you must define it per instrument. Then you will get an alert on symbol on chart. It helps to visualize the extremes in the book. And very nice to see, oh yeah, it's running away, but anyway, you see very high volume, a higher volume traded here at 63 than at 65, 66.
ESH2 delta.
It's not bad. You see what happens when you understand these techniques is you can take a short here, you will have still something to eat if you take 1, 2 ticks or 4 ticks here, and the second one to be stubborn going short. I've considered this 165 to taking short here. I was a little bit too reluctant, but anyway, 65 into 58 is not bad. Guys, that's not bad. Two, 3 points here and there and so on. 2, 3 trades with 3, 4 points. It makes you a day. So you know my philosophy personally. I'm finished when I've got my gains, mostly 10 points. That's fine. I'm really happy with that. The last days you will get more than 10 points a day. In this market, in this high illiquid market.
Sell volume spike.
And if you can repeat it, let's say 10 days a month, you will be good. You will be excellent. So Polo at VWAP again. Let's see if the VWAP is holding. My ticks are not holding, so they are negative as well. The ADD is down. So the proto market is a little bit more weaker than it was an hour before.
ESH2 delta. ESH2 delta. ESH2 delta.
You see, when you watch this chart very closely, you see how they are trying to protect the 45.50 area. And as well, we have a nice institutional levels around, or not around, but exactly at 45, 48, 50 area. They're trying to protect this area here, protect it here, excuse me, support it here, and they're trying to support here as well. That means we could run into a choppy phase for the next, how late is it? Yeah, for the next 2-3 hours maybe.
ESH2
Or 2.5 hours. You see how they don't dare to touch the 50, 51 again. Very nice iceberg here, developed over the time, very short one. When you zoom in, you will see the details. Started here, filled here, and got a fill here as well. Small stop run indication here on the MVP. Nothing really big or exciting. That's the classical setup around the VWAP. You know, VWAP is extremely important. You should watch and obey the VWAP. Watch where the market is, above or below the VWAP. I'm adding to my chart as well the 2-day VWAP and 3-day VWAP. I'm using NinjaTrader, and I'm only with lizard trader indicators. If you want to have a look and you are using NinjaTrader, have a look. Give the lizard traders chance. Excellent indicators, affordable. Walter, what's generating those arrow icons for you? You mean these green ones? This is the Market Volume Pro. As mentioned, the Market Volume Pro measures the aggressor volume, and when the V delta, this is the product of bid minus ask, when the bid delta crosses 0 and trades more than 150 contracts. Let's have a look here. Here, when you look here at this point, yeah, that's not the best one, but anyway, when the V delta crosses and trades more than 150, then this signal is put on chart. As well, it's a little overlaid by that signal. The same applies here to this one, the white one. So V delta dropped, in this case below 0, and because I have defined or set it to 150, because if you set it to 10 or 50 you got a lot of nonsense here on chart. And no, that's not an imbalance. It's, you know, everything happens. It's not imbalance, Martina. No, it's not imbalance. It is simply when either buyers or sellers are in charge. Let's have a look here at this point where we see this 154. That's not imbalance. Here again, let's zoom in a bit. And what happens here, the sellers are simply in charge. And when the sellers are in charge, the V delta drops below 0. When the V delta is below 0, that means we have more sellers than buyers. And that triggers this signal. And when we have the opposite sign, the green one here, for example, you see, that's not the past example, but where's the red line here? I'm missing the red line. Let's have a look here.
ESH2 delta.
Or here, for example, let's have a look here at this point. So the V delta, I missed that one, so excuse me. So anyway, the V delta jumped above the 0 line. This is because the buyers are in front, or they are leading. That means the greens, they are buying, and that brings the difference between bid and ask, brings the V delta above 0. And when the V delta is above 0, that means there have been buyers, and this threshold of 150 has been reached, and therefore the MarketVolumePro is here signaling or drawing an error in this case, or whatever symbol you want, and you can even attach an alert to this signal here, and you know in this case that the buyers are in charge, and on the other side, if sellers are in charge here, like here, then you will get the opposite signal.
ESH2 delta.
Yeah, because simply I'm used to that's nothing mystical here. What I'm talking about, what I'm telling you here, that's really nothing mystical. Therefore I want to encourage every one of you, put an order book on your chart. Doesn't matter what chart you have. Maybe you're with other systems or charting systems. All of them have a dome for sure. And what I did here, I simply replicated the Jigsaw Trader dome here on Bookmap. That's the same one as Jigsaw Trader has. Jigsaw Trader has some bit different functionalities, but it doesn't matter. I was used to use the Jigsaw Trader dome, and then I put this on the chart here, so you have a very nice and complete view of the market. It costs you nothing. It costs you really nothing if you are with TradeFinder, or you using TradeFinder. Go to tradefinder.info settings, and then you can set up easily your own your dome. We are providing this information. We are providing this information on this side here, TradeFinder for Bookmap. There's a menu instrument configuration. When you have your, when you run your TradeFinder, you can use this configuration I'm preparing or updating regularly here. So for yes, for example, and that shows how to install this BMCS file. It's really easy. Your child of your kindergarten child can do it very easily. It's really impressive and easy to do so. And by the way, then if you do so, you will get the same settings as here. You can adjust it to your favor and what you prefer and so on. It's really easy. You can do that in few seconds. What we see here is a very nice iceberg still in the book here for 28 minutes 12 seconds at 45.50. It was hit. So I missed that one because I was talking, and I missed that one, but because that was a very nice long position here. That was a very nice long, and the target is always the institutional level here at 50, 59 here. So if you are taking this dynamic iceberg, it comes with it's in a liquidity area. It was in the book since, oh, it's a long one. I can't even see that. Where's the beginning? Ah, yeah, it's hidden behind this. It's hidden behind this. No. Here,
Yes,
it's hidden behind this label here.
UVXY.
So this iceberg started here, or this order ID started here, and it wanted to trade several parts of the order ID. Got a first hit at 45.50, exactly here at 11:22 Eastern time, 11:22 Eastern time here, and still awaiting another fill at 45.50 here, still waiting in the book, or still sitting in the book here. That's, by the way, if you're not sure how to trade and what to trade, and when you understand this this magic here, which is really not magic, but anyway, when you understand that you can beautifully get some points out every day, 50 into 57, 56, 57, whatever, that's the institution level. You see how they hit the sweep here. You see the marker of them for Market Volume Pro because the V delta dropped below zero. Dropped below zero here. And now maybe it's coming back to 45.50. And this guy with his odd IDs may be getting another fill or another part. So he's waiting for another 25 contracts to be filled or to be traded. And he is in the book for 30 minutes right now. And watch how the price is approaching the 45.50. Yes, lightly. It's already there. You can use it. You can. I'm saying we can't do this for every instrument, but the most important, and if someone is asking me to add some exotic instruments, I try to see whether we can adjust it to meaningful settings, and you can use it and simply copy this BMCS files. It's very easy. And once you have set up your environment, you can inherit the charts to other instruments as well. So it's really easy to especially when we have an rollover date. When you roll over from, let's say, from one ES contract to the another to a new ES contract, you don't need to redefine everything. You simply let the old contract run and inherit all the settings from the prior contract or from the former contract into the new contract, and that's it. That is very easy with Bookmap, and it's really excellently solved by Bookmap. No. I'm updating really regularly, but at the moment we have, all the settings depends on on instruments liquidity and volume, and I've updated them several days ago, I don't know, and because the volatility dropped, the liquidity dropped. The liquidity dropped very hard, and that makes a little bit more adjustment needed for this instrument. Look, he didn't get a fill here. Oh, I lost it. Yeah, it was filled right now, so I'm sorry for that. The screen delay was a little bit too... So he closed it exactly at 50.50 and with 370 contracts. It's running your way, go Polo. Good. Oh, take care here. There's another one he wants to sell. So you're a little bit in in a trap here. Okay, they are playing something like ping pong or whatever. Again, this institution levels was there long before the open. There's nothing we are doing here is hindsight or paper trading or whatever you might seen. It's all real, live, and real explanation just in time when it happens. And I support totally Rhino when he says, and that's really true, guys, that's really true. When we are trading, we are now, in the now, we are trading now. We don't have the time for long explanations. We don't have the time to have 10 arguments why to go long, why to go short. We can explain everything in retrospective. We can do anything, but knowing when to enter, why to enter in the now, and not tomorrow, and then explaining in long epic explanations and sentences and points why the market was bullish and why to enter the market here and what are the reasons. That's all important to have some examples, but if you want to make money, you have to decide it now, and you have to decide it on facts and not assumptions or beliefs or whatever. And what you see on my Zoom chart here based on TradeFinder are simply facts. They come and they go. Polo, yeah, we have more weakness right now. So I see more weakness when I'm watching my ticks, when I'm watching ADD, there are all the correlated markets. I see more weakness than strength in the market. So if you're long 48, it's not bad. It's not a bad move. But I doubt whether you can get 10 points out of this move. Or they are chopping here around this 47, 46, and then jumping off, or taking off here. 47 into 50 and 60. Oh, you shot. Okay, good. I've got a nice sign here to go short, but I missed that because of the explanation of the talking here to you. I hope somewhere you are still here and listening and watching. We introduced with TradeFinder 3, released 3, a numerical identification of the trading native icebergs here, which gives you a good impression of resistance and support. So you see 801, it's really tiny, but I don't want to stress my screen here. 801 traded at 47.25. That was this event here, that event here. So based on the iceberg profile, it gives you an idea that that was in this case a nice good support. It was a good support here. Oh, Rhino, thank you. Love you, man. You know, that's something you can't see on a candle chart. I'm using candle charts, of course. I have my Ninja Trader, I have my Lizard indicators. I love them and I'm using them. So this is not a belief here. As I say, I hate ideologies in trading as well, in politics and religion and so on. But I want to rely on market facts. And on some days they are extremely clear what a market is doing, on some days they are not. And that's something what gives me confidence, what gives me confidence in my trading. So I'm really chilled, I'm leaning back and waiting, and if I'm bored I'm simply leaving my screen, and that's it. Don't overtrade, don't take too much time in front of your screens, and don't chase anything. If you don't see an opportunity to trade, leave it. This is a casino, you know, and when you got your gains, leave the casino and be happy. Enjoy your life. That counts more than anything here.
UVXY, sell volume spike.
This is a buy sweep, 300 buy sweep. There's a kind of buying pressure coming in here. Very nice to see now kind of support resistance area. This area was defended, this area was supported. And that's really a nice area where the market might lift off into 45 55, 57, 58, even 60. I think that's a kind of magic here. You see how the Market Volume Pro supported the long side. We have a flip-flop here in the trading between 50 and 47. Then we have had this nice iceberg supporting that, 801. This is this green line here. And the Market Volume Pro supported that as well because it indicates that the buyers are in charge. Takes a little bit time. This sweep supported on long as well. And you see how they are trading in 58 and 60. That's the first target. So if you take a long, understand this kind of trading, then and this is the next target, 58. Now you are lucky. If you are long, then the market goes to 60. No mic, no mic. We are. I'm sharing Zoom because of the video quality, and the sound is only on Discord. Thanks, Martina. That's a perfect trade, you know, when you're focused and you're not distracted by anything. That's really something which is really perfect, and the exit of Polo was perfect here. Polo's exit was excellent. And you see again, when you in case you have spot gamma as well as I have, this is not a spot gamma level. This is an algo level here. It's 47 here. Long before in the daily prep room. Long before the open. So you see how it works. It's really magic sometimes, and I would like to understand how they are calculating them or what's behind. At POC, the daily point of control here at 64. Don't wake them up.
ESH2.
There it goes, guys. Look here, 500er. 500 iceberg, excuse me, 500 sweep. Sold at 61.75, 61.75, 500 sell. Came together with a stop run here. I have to reduce the transparency. Oh. No, it was one. It was simply an. It wasn't a stop run here. It was V delta cross. So.
ESH2 Delta.
Okay, guys, do you have any questions or suggestions? Whatever we should discuss or clarify or answer. It's a good point to start a discussion here.
ESH2 Delta.
Yes, I invited him. Only I invited him today. Shouldn't be a problem. Yes, it's up to him. Only it's up to him. That yellow line.
ESH2 Delta.
I'm not sure. Maybe you're talking, or you mean maybe this one here. This yellow line. I'm not sure what you mean really. This yellow line here is the POC, the point of control. 4664. This is that's the point of control here. That's the point of control. It has nothing with the iceberg. This is a native iceberg. This is a native iceberg, and this iceberg. Let me have a look here. Excuse me. This was sweep. That was a sweep. This sweep was is indicating there were 500 contracts sold at 61.75, and that has nothing to do with the POC, the point of control here. This is a total yes. Another that was an iceberg, that was a sweep here, and that's a completely different event here.
ESH2 Delta.
As well here you see another one. So they are trying to hit the market with sell sweeps. And when you are TradeFinder user, you will get a TradeFinder primer or TradeFinder booklet, which I have prepared for every TradeFinder user, which explains our trading concept and our trading philosophy. The whole TTW team is not here to make software, code software, and some indicators. It is a concept. Because first of all, we trade them. We trade it on our own. We are putting our own money on that. What we are showing here, what we are developing, and that's what we call this, not an iceberg indicator or a stop indicator. It is a trading concept which includes more than only icebergs and anything else, because we don't think that icebergs on their own are beneficial for us, or beneficial for us, for our trading, for our profit. We have to take everything in a concept, in a context of the market, and then trade with this concept. That's important to say, because we have literally thousands and thousands of indicators, and what we need is a thorough understanding of the market and its characteristics, and characteristics of the market, to understand what the market is doing. And every market is different. So what you have to know is, or must know, is that market volume is different for every single instrument. If you are trading stocks, it's totally different than if you are trading, for example, oil, gold, ES, YM, NQ. Have a look here at the NQ chart. You see the market volume right now is 900. Let's have a look here. It's at the ES market volume is around, in average, 1,000 average. That's simply an average number here, and the average liquidity in the book is around 100, which is not bad. We have had times, days, 2 weeks before, where the average liquidity was 40, 50. So the average liquidity improved, but it's far away from the standard ES was years before. And when you look at the NQ, for example, then you see the difference. So market volume NQ is only 90-100 in comparison to ES, which was 1,000, and the average liquidity is only 6 in the book. You see how thin the book of the NQ is, and that means this is a much faster trading here than with ES or treasuries, for example. So every instrument trades on his own liquidity and market volume. In stocks you have 100,000, 200,000, and so on, and in future you have a different world. That's important to understand.